were still a lot of naysayers, right? A lot of people saying it's a bubble, it's going to zero, it's crashed, it has no real value. What convinced you that actually Bitcoin in particular is a real thing and it's not going to go to zero anytime soon?
So I studied political science at university, and I learned enough about politics to realize that I never want to work in politics. And when I started really learning about Bitcoin, I thought, oh, this is actually incredibly powerful. It's a wildly powerful tool. And when you start to understand the value proposition of what's on offer here, this is the value layer of the intranet. Actually, in 2018, having some more time to relax a little bit during the bear market, you learn even more and you go, holy cow, there's no way that this is going to go to zero. There's no way that this is not going to be massive in the future. And once you really understand it, there's no going back.
What are your top 5 cryptocurrencies that you're really big on?
Beyond Bitcoin, my top 5 holdings right now, I'll just tell you real quick. So Ethereum is my second biggest holding. It's around 15% of my cryptocurrency portfolio right now. 3 is a blockchain called Phantom. So Phantom, Say, Aptos, these are some of my biggest plays. And in at 5th place is a meme coin called Brett.
Another very good video you have on your YouTube channel, it's called 13 Truths That Most Crypto Investors Will Understand Too Late. Take us through the top 5.
Don't get married to any of this stuff. This stuff's all highly speculative. You have to take your profits or the market's going to take them for you. This is a player versus player market. A lot of the coins are bullshit. Most of these coins have very little functionality. So you actually have to define the utility of the coins that you're buying. Don't just blindly buy stuff, which of course comes to the next point, which is you got to do your own research. So many people, I guess it's in all financial markets, but particularly in crypto, because they don't understand things, they don't take the time to educate themselves. They want to outsource their thinking to somebody else.
For individuals who are just getting into crypto for the first time and are a little bit worried about, some of the scams or maybe losing their money or a website getting hacked, what are some of the safer places to buy and store crypto?
Absolutely. So, well, one thing, you can now buy ETF products for Bitcoin and Ethereum if you want to buy your own coins, if you want to do it the old-fashioned way, okay, and start finding more things. Crypto.com, Coinbase for people in the United States, the UK, Canada are great places to go and buy Bitcoin, okay? If you're internationally based, Binance or Bybit are really great options. But if you want to go a bit farther down the risk curve and start experimenting and actually get on the blockchain, find new coins early, stuff like that, you really need to invest in a hardware wallet to do that. And keep in mind that, again, you don't keep your crypto on exchanges. You go there, you buy, you sell, you get out, put it on your own wallet that you control the keys for. We have a saying in crypto, not your keys, not your coins.
This is the Money Seed Podcast, where we discuss all things investing, plain and simple, the way it should be. Please remember, this show is for educational and entertainment purposes only and is not intended to be investment advice. Welcome back to the Money Seed Podcast. My guest today is Lark Davis. Lark is a very well-known personality in crypto. He has over 600,000 subscribers on YouTube, over 1.2 million followers on X. Lark, welcome to the show.
Thanks for having me. Excited to talk crypto with you.
Lark, you are very well known for your various posts on YouTube and X, and I love your videos. Tell me, when were you bit by the crypto bug?
2017. It's funny, actually, first came on my radar in about 2012, but I didn't buy any. I was in university and needed beer money, right? But in 2017, I decided, okay, this has to happen. I've got to really go in here and dive in deep. And once I really spent some time learning about it, I was hooked. The first probably 6 weeks of my crypto journey, I was just up every night, just buzzing. Like I can't even go to sleep. I'm so excited about everything. I have to learn more. And so I've been making content steadily since July 2017, basically. And a lot of my early content was just around me documenting that journey, learning about stuff and sharing what I learned. Then I'd see people ask questions in the comment section. I make a video on that because I don't know the answer, but I want to know the answer. And so I learned an incredible amount by making content actually in that sort of first year about how blockchain works, mining, investing, all this kind of stuff. So it's been quite the journey. But yeah, since 2017, that's when I really got bit by the crypto bug.
Back in 2018, there were still a lot of naysayers, right? A lot of people saying it's a bubble, it's going to zero, it's crashed, it has no real value. What convinced you that actually Bitcoin in particular is a real thing and it's not going to go to zero anytime soon?
Yeah, so I studied political science at university, And I learned enough about politics to realize that I never want to work in politics. And it was a good time, though. I had fun at university, but you learn a lot about how the world works and money and economies and all this stuff. And when I started really learning about Bitcoin, I thought, oh, this is actually incredibly powerful. It's a wildly powerful tool. And when you start to understand the value proposition of what's on offer here, this is the value layer of the intranet. The intranet before crypto lacked verification, it lacked authentication, it lacked the ability to transfer value in a trustless way. I mean, okay, sure, we've had all kinds of centralized services that store your data and get hacked all the time and all that kind of stuff. You have PayPal, but you can be cut off at any point, and there's capital controls only available in some places to some people. Crypto just broke down all these walls. Bitcoin, of course, being the tip of the spear of this and everything else coming behind it. But all these walls got broken down. Now, anybody, anywhere, regardless of race, religion, political opinion, any of this stuff, has access to finance. And you can save on chain. There's all kinds of Bitcoin, just the top coin, right? There's all this other stuff going on chain, from stable coins and borrowing and lending markets. And when you start to realize all this stuff happening, you start to go, holy cow, this is going to be foundational technology of the future of the internet, especially now that we have AI happening. You're going to need even more the ability to authenticate transactions and who has what and who's a real human or not a real human and all this kind of stuff. So I started creating content in 2017. I quit my day job in 2017 as an English teacher, went all in November 2017, right almost at the peak of the bull market. Then 2018 was that sort of, was this the right decision moment? But I'd already burnt the boats to take the island, so to speak. I was all in. And actually, in 2018, having some more time to relax a little bit during the bear market, you learn even more and you go, holy cow, there's no way that this is going to go to zero. There's no way that this is not going to be massive in the future. And once you really understand it, there's no going back.
So tell us about that first dip, right? Because I mean, Bitcoin, like everything else, goes through cycles, right? And it seems like when it goes high, it goes very high. When it goes low, it goes very low. And you had these crazy ups and crazy downs. How did you psychologically handle your first major dip, especially as you say that you didn't have a full-time job at this point?
Mm-hmm.
Mentally, psychologically, this isn't just a Bitcoin question. This is a general investing psychology mindset type question. How did you handle the crash?
Well, the first sort of big dips you see, not talking about the bear market, just the first big dips you see, you freak out. Oh my gosh, I'm losing my money. What's going on? Because I didn't really learn very much I was learning about the technology, what Bitcoin and crypto is doing. The investing side, yeah, I was investing, but in terms of market cycles and psychology and all this stuff, that came a bit later. But nothing really prepares you for the volatility in crypto without just being part of it. You can watch it from the sidelines, but until you experience net worth swings of gargantuan sums, it's hard to fully contextualize it. And crypto is a wildly volatile asset class, notoriously volatile asset class. Bitcoin is the least volatile of all the assets in crypto. And during a bull market cycle, to run up 1,000% and then dump 70-80% in the bear market, which is insane. Crazy volatility. And most of the altcoins, the big ones that will stick around cycle to cycle, they're going to drop 90% in the bear markets after running up 2,000% during bear market bottom to market cycle peak. And a lot of the other stuff, all of these crazy things people are investing in, meme coins and dog coins and whatever else, that stuff's going to literally go to zero in the bear market. These are the kind of things that only can really exist in a period of high speculation in the market, when money's flowing easily and speculation is high and greed is high. Because realistically, come on, you're buying a picture of a dog with a hat on it. How's that really going to end up long term? Probably not very well.
So as Bitcoin was going down, did you end holding, or were you actually trying to sell and buy and sell and trade as it was going up and down? Or like, what's your strategy mainly?
Sure. In the early days, and a lot of this in terms of, okay, there's a few things you have to keep in mind. There's Bitcoin and then there's everything else in the cryptocurrency market. Everything else, you can largely just swing trade it, sell it, whatever. Bitcoin, I like to just keep. It's almost like a savings account, right? I've got fiat to cash out, you throw it into Bitcoin, just forget about it. Dollar cost average in, think about it long term. And so that first cycle just held everything right down. Bitcoin, I didn't mind holding. The altcoins, they all went to zero. Well, not all of them, but enough of them went to zero to be a very painful lesson for the next cycle, when I sold quite a few of my altcoins, but said, no, I'm going to try to hold the strong ones down in the bear market. Most of those went down 90 to 99%. Some of them just died, never came back. So this is a wildly speculative marketplace. And a lot of these things are startups. Startups have a 90% failure rate in the real world. They have a 90% failure rate in the crypto market, even higher probably, depending on what kind of asset you're talking about. If you're talking about an AI company, it's actually doing something real. They still have a 90% failure rate, but at least there's a real product. If you're talking about putting a hat on top of a dog and then running that to billions of dollars of market cap, that has no fundamental value behind it, right? And hey, we love that. That's great. Speculate, have fun, trade, enjoy, but realize what it is that you're actually investing in. So for me, I look at altcoins as a great way to generate higher returns during a crypto market cycle than Bitcoin. Bitcoin's like the savings account. You buy it, you hold it, you don't think about it. If you're willing to stomach the volatility long term, right? You can try to swing trade it and all stuff. That's fine. People do that successfully. I'm not so much interested in doing that. I can swing trade my gold and stuff too, but whatever. I'm happy holding on to Bitcoin, just letting it ride. All the altcoins though, they are so volatile and will crash so hard during a bear market. There's not a good reason to hold on to them. So you have to just take the profits on these things, even the good ones. And the good ones you can rebuy in the bear market, right? That's not to say you have to walk away from those investments forever and never look back. But because the volatility and the greed gets so high and there's so much leverage in crypto that pushes the prices so sky high near the peaks of a cycle, valuations just get absolutely silly on kinds of stuff. I mean, and a great example would be last cycle in 2021, Dogecoin, picture of a dog. That's all it does. It's got a picture of a dog on it. It is its own blockchain, so it's a little bit better than some of the new dog coins. But regardless, it's a picture of a dog. It went to about, it was $80 billion market cap, right? So you have to just kind of keep it real. You're not buying Microsoft or Apple. You're buying a dog coin, right? And there is inherent risks and opportunities that come along with doing that. So for me, Bitcoin long-term hold, I'll be holding my Bitcoin in the 2030s, maybe even beyond. I don't know. We shall see. If it gets up to $1 million plus a coin, as I think it might in the 2030s, then you know what? I'm probably going to take a few off the table. But all the altcoins, that's just cyclical stuff. You get in, you get out, take your money and run.
Today is December 20th, 2024. Bitcoin has had an amazing run this year. I think it was down to somewhere around 40,000 in January, more than doubled this year. It recently peaked at 106, and now it's pulled back a little bit. I think it was around 95,000 this morning. Right now, it's a bit of an interesting time for Bitcoin. Like you mentioned earlier, there's all kinds of ETF products coming out, and right now we have a change in the administration coming. What are some of the signs that you look for, whether it's in the media, whether it's on social media, whether it's in the investing world? What are some of the triggers that you look for that indicate to you, hey, right now we're heading into a bullish phase, or you know what, right now there's some headwinds?
Yeah, so there's a lot of things making a great bull case right now for the cryptocurrency markets. You have $37 billion of net inflows in ETF products so far this year, wildly bullish. And that numbers continue to grow. BlackRock's out here shilling Bitcoin, telling people you got to get a 2% allocation in your portfolio to Bitcoin. So this kind of stuff is happening. Of course, it's very exciting, wildly bullish to see sort of things going on. You have the Bitcoin Strategic Reserve now being proposed by the United States, by the Trump administration. Now you also have other countries, Brazil. We've had a Japanese politician talk about it. We've had a few others around the world mention that it could be a possibility for them. So very big things are happening that are getting the momentum really moving in the cryptocurrency market. The stablecoin volumes are up. The global M2 money supply, which is of course very important, has been rising. Interest rates are easing globally. China's rumored to do a massive stimulus package soon. And I mention all that macro stuff because crypto no longer lives in the kind of vacuum that it used to back in 2017, was much more isolated, still very much susceptible to broader risk on, risk off attitudes. But it was a little more of its own sort of beast back then. Whereas nowadays, with the increasing institutionalization of Bitcoin and the increasing adoption of major institutions, major family offices, endowments, and of course, the rising popularity of Bitcoin ETFs, Ethereum ETFs starting to catch a bit as well, everything in crypto is becoming a lot more institutionalized, and our correlation to the stock markets, key indexes, NASDAQ 100, S&P 500 is incredibly high. So when the Fed talks and the stock markets react, Bitcoin tends to react at the same time in the same direction that stocks react in. So we're definitely seeing crypto being something of a beta play. So I like to think of it like this. You have the S&P 500. Tech stocks are kind of a beta play to the S&P 500. Bitcoin's a beta play to tech stocks. Ethereum's a beta play to Bitcoin. The rest of the altcoins are a beta play to Ethereum. Meme coins and NFTs are a beta play to that. You're continually going down the risk scale as we go through that conversation, right? From the safest thing, the S&P 500 index fund to tech stocks, a little risky, and so on and so forth down the line you go. So yeah, that's kind of a way to think about it.
It's kind of fascinating that you mentioned that it's a beta play to the S&P 500. And that's the first time I've ever heard anyone describe it like that. A lot of people kind of just describe it and say it's kind of like digital gold. But from what you're saying, it sounds like it's maybe more correlated to the S&P 500 or to tech stocks than it is to, say, gold. Why is that, do you think?
Well, because at the end of the day, crypto is tech and Bitcoin is digital gold, right? But you can't forget the digital part, right? We're not talking about just gold here. We're talking about digital gold. And it's got a lot of the great properties that gold has and enhances on them to a dramatic degree, make it much more portable and divisible and all that kind of verifiable. You make sure you're actually getting real Bitcoin, not fake gold, all this kind of stuff. But at the end of the day, we've seen very strong correlations of Bitcoin to tech stocks, the NASDAQ 100, this kind of stuff, because crypto is tech and crypto has started trading like a highly volatile version of tech stocks, essentially. And you can see that. Whereas today, the S&P 500, the NASDAQ 100, they're both down 3 or 4% or whatever it might be in the past few days, 5%, let's say. Bitcoin's down 15% in that time. Ethereum's down 25% in that time. Most altcoins are down 30 to 40% in that time, right? Stack it down. When things start reversing, S&P 500 goes up 5%, Bitcoin's going to be up 10%, Ethereum up 20%, altcoins up 30, 40%.
You mentioned earlier that in your personal portfolio, you kind of just have a long-term outlook on Bitcoin, and that's kind of like your savings, or it's analogous to your savings. And then a certain portion of your portfolio you allocate to other types of digital assets. What are your top 5 cryptocurrencies that you're really big on?
So we can just go by total percentage of portfolio. It's probably just a nice, simple way to look at it. It's beyond Bitcoin. Beyond Bitcoin, my top 5 holdings right now, I'll just tell you real quick. So Ethereum is my second biggest holding. It's around 15% of my cryptocurrency portfolio right now. If Bitcoin currently makes up about 40 to 45% of my portfolio, but Ethereum is number 2. Ethereum has been price-wise lagging a little bit behind on the Bitcoin move. Bitcoin's hit a new all-time high. It's gone from 74K, which was the high that it hit back in March, up to 108K last week. Ethereum, for perspective, is still at its highest level this year, was still about $800 away from hitting its previous high. So it's been lagging behind, but Wall Street's starting to bid it up. And Ethereum, in spite of its lackluster price performance this year, remains a very robust asset for a variety of reasons. Most total amount of money on chain, total amount of money in borrowing and lending markets on chain, and total developers and all this kind of stuff. So that's number 2, my portfolio. Number 3 is a blockchain called Phantom. So I've got quite a big amount of investments in sort of alternative layer 1 blockchain networks. Phantom, Say, Avalanche, Aptos, stuff like this. So these are big blockchain networks that are sort of competitors to Ethereum, operating in that same kind of space. So they have different value propositions between them in terms of numbers of transactions per second and how much adoption they're getting and all this kind of stuff. But every single cycle for crypto so far, what we have seen is that some of the safest plays, quote unquote, for crypto have been layer 1 blockchains. And a lot of people out there, they want to chase that next 100x play, but you don't need to get 100x play. You can get a 10x play, which is insane gains, by the way. This is the kind of stuff we talk about in crypto as normal. I was telling somebody on my stream today, and they're like, I need to get a 50x. Like, hey, I need to get 50x, man, get a 5x. 5x is crazy. You know what the NASDAQ and the S&P 500 do every year? If you're getting a 5x, that's insanity. We're just talking about 10x's and 20x's casually. It's nuts. But that's the kind of potential that you'll see in terms of greed and the volatility and the leverage that gets pushed up during a crypto cycle. So Phantom, Say, Aptos, these are some of my biggest plays. And in at 5th place is a meme coin called Brett. So this is about 4 or 5% of my portfolio. Brett is a Matt Fury-based character, much like the Pepe meme coin. So this lives on the Coinbase base network. It's just, a funny picture of some blue frog sort of character. And the guys over at the Brett team, they're really good on creating all kinds of fun social media stuff. They're constantly pumping out videos and music videos and all kinds of stuff of this Brett character. But meme coins make money. And meme coins are a very funny thing because a lot of people want to mid-curve it. They go, there's no utility to this. It's totally dumb. Why would I buy this? Okay, fair enough. But you look at the left side of the mid-curve and it's culture coins, number go up. Right side of the curve, right? The wizard looking at it, this is the internet culture. This is where cults and communities form behind. People who are diamond hand holders and are out there evangelizing their coin every day and all this kind of stuff. So the phenomena of meme coins is pretty hard to ignore at this stage. It's literally been the best performing sector in the cryptocurrency market in the last year. AI, very, very close second, though, by the way. AI crypto coins have done absolutely fantastic in the last year. But meme coins have done well. But a very, very small sector of meme coins have done well. There's maybe a few dozen meme coins at the top of the top that have done well. The vast majority of them, there's a website called pump.fun where anybody can create a meme coin. They've been making about 50,000 meme coins a day. And of those 50,000 a day, 49,999 probably go to zero within an hour. And the other one might get a few $1 million market cap. And then maybe every couple of weeks, one of those ones from the day actually goes off and does something. So this gives you an idea of the odds, right? People are out here literally just gambling on these new meme coin launches. But I like the ones that already have established communities behind them, that people have already rallied around and have exchange listings, all this kind of stuff. Things like Brett, right?
Absolutely insane. 50,000 meme coins a day being created. Dude, that's wild.
It's crazy beyond belief. It was getting pretty dark there on the Pump.fun website for a little bit because they were allowing live streaming, and people went real dark real fast. Man, there was like a kid who was getting a meme coin, like, I'll show you my mom's boobs or something like this. And there was another guy who was like dressed up as a dog in a cage. Like, things got real crazy, man. They had to shut the live streaming down because it was getting too dark too quick.
You mentioned a technical term earlier, and I was hoping you could break it down for us. I think you mentioned something about layer one chain or something similar. What is that?
Yes. So there's blockchains in crypto, right? And we call these layer ones because Bitcoin's a layer one blockchain, Ethereum's a layer one blockchain. So we say layer one, it's the base layer, right? So with Ethereum, how Ethereum works is you have Ethereum. Ethereum's a blockchain. It's a layer one blockchain. On top of Ethereum, all kinds of stuff is built. So if you look at Ethereum as the land, then people come and buy and put stuff on top of the land, and there's all kinds of things that are built there. So those are the applications, right? So you might see borrowing and lending markets or decentralized exchanges or games, whatever it might be. They build on top of the layer one. So they're applications on top of the layer one. It's got crazier now, though, because now we have layer two networks. So you have layer two networks that are built on top of the layer one networks. So they essentially offer usually much faster speed and much cheaper transactions while linking back to the security of the layer one. And then people build applications on top of layer twos as well. It gets pretty crazy. I'm not gonna lie. It gets pretty nuts out there. If someone's even built layer threes at this point, it's too much for, I think, even for me to want to digest sometimes, let alone your average sort of investor coming in and going, wait, what's layer one? Now you got layer twos and layer threes, and everything's got applications built on top of it, and there's bridges connecting them, and it's crazy.
It's kind of been my schoolhouse rock type understanding as well, is that Ether is more like an operating system and you can build stuff on top of it. Bitcoin is not. Bitcoin is just Bitcoin kind of thing. With Ether, I remember 3 or 4 years ago, there was this talk of like an inversion, right? That Ether was somehow going to pass Bitcoin and Ether was the next big thing. It hasn't happened, or it hasn't happened yet. What is your take on that? Were we wrong on Ether in some way, or what's happening there?
Well, it's an interesting conversation. And there is actually some stuff being built on Bitcoin, by the way. It's much more niche, and it's certainly not as vibrant as what's going on in Ethereum, but people started doing some meme coins and stuff on top of Bitcoin. That's a whole other conversation. In terms of Ethereum flipping Bitcoin, It's just one of those funny things that people in crypto seem to think is important. It's just a vanity. It doesn't matter who's in first place. I mean, does it really matter if Microsoft or Apple or Nvidia is the biggest company in the world? Really? It's all sort of relative, right? But the conversation was sort of around, well, because Bitcoin doesn't have any utility, but Ethereum's got all this utility and it's got all these cool metrics behind it. It's got, perpetual stock buybacks, which is called the burn mechanism and stuff like this. And it's got this huge demand because you need to have Ethereum for lending markets and borrowing markets and all this kind of stuff. But they fulfill different ideas. Bitcoin's digital gold, and yes, it is a tech thing, right? But it's digital gold and it fulfills that niche. Gold in the real world has a market cap of probably $15-16 trillion right now with the current prices of gold. And Apple and Microsoft and Nvidia are all around 2 to 3 trillion. But neither invalidate the other, right? We don't say, wow, Apple's got to flip the market cap of gold to have value and validation in the marketplace. That just would be silly. So it doesn't matter where it ends up. And yeah, there's more utility on Ethereum by a long shot. By a long shot, the stuff you can do on Ethereum is insane. And Ethereum's this nexus for a gargantuan amount of development and activity. And those layer 2 networks we just mentioned, by the way, that is building on top of the security of Ethereum. You have Coinbase, which has launched the layer 2 network, Kraken, Sony, who was it? Deutsche Bank. They just announced they're launching a layer 2 network on top of Ethereum. So this is the place where institutions and major companies are choosing to go to build their layer 2 networks on top of Ethereum. They're not building it on top of Bitcoin because it's not a very great place to do that.
Lark, I think you posted a really cool video on YouTube about a week back. And I think the title of the video was something like, if you started today with $1,000, here's what you should do. Walk us through the video. If somebody has $1,000 or any kind of relatively small amount and they're interested in crypto and they're like, you know what, Bitcoin's all over the news. I don't want to miss this train. What should people do today with that small amount of money? How would you get started?
Sure. So that video was very specifically aimed at people who aren't really investing. They have like $1,000 only to invest. Not like a guy who's like, I got an extra $1,000, but I already have, $500,000 in stocks and $500,000 in properties. That's not the guy we're talking to. We're talking to the guy who literally, like me when I started out, only had a few $1,000, right? And you're coming in, and the reality of the market cycle is you're not going to get rich going all in on Bitcoin at this point in the cycle. And a lot of people come to crypto because they want to make money. So the general idea in that video was, if you're coming in now and you only have $1,000 to your name, you want to try and make some money in crypto, because I see these people every single day. Get a little bit of Bitcoin. Get $100 of Bitcoin. Because no matter what happens, you're on the Bitcoin train. You've got exposure to it now. It's not going to buy you much Bitcoin, but it'll buy you something. And now you've got some. You can say you have a Bitcoin. You're a Bitcoiner. You have a little bit of Bitcoin. And regardless of what happens to the rest of the 90% of the portfolio, which you're going to put in super high risk stuff, you've got your Bitcoin, right? So the other 90%, my recommendation was to split it half into meme coins and half into AI coins, because those have been the two biggest earning, most popular, most hyped, most attention-focused narratives of the cryptocurrency market cycle. And where attention goes, money flows. And those have been the biggest gainers by far, blowing a lot of other niches completely out of the water. So if you want to make the money, if you're that guy who's only got $1,000, right? And I said in the video, the advice really depends on who you are and what you're doing. But if you're that guy with just $1,000, find some low cap meme coins, 4 or 5 of them, put your $450 there. Find a few low cap AI coins, 4 or 5 of them, put your $450 in there. And you might lose it all. Probably not, but you might lose it all. But guess what? It's only $1,000. You can find another $1,000 at some point, somewhere, right? I'm sure you will. But your chances of getting good returns out of that are pretty high, right? Because a lot of people, they come into crypto, they don't want to just turn $1,000 into $2,000, which is what you would do if you just bought Bitcoin. My general prediction has been that Bitcoin tops this cycle somewhere around $200,000, maybe $250,000, like max, right? So you turn your 1,000 into, best case scenario, $2,500. Most people don't come to crypto for that. They want more. They want to have bigger returns. And so they need to go farther down the risk scale. Again, if you only have $1,000, you probably can lose your $1,000 and you'll make it back, and you can try again if you screw up and you only buy the worst coins possible, right? But if you're coming in with more money, you're a guy who's got $1 million portfolio and you want to allocate $100,000 into crypto, that would not be the portfolio to get into. Now, maybe you want to take a little more risk beyond just Bitcoin. You probably still want to get some Bitcoin, but you can take a lot of safer moves without taking on that kind of insane risk. And with $100,000, 10% of your $1 million portfolio, you can find some pretty nice balance in terms of getting into some of those bigger coins. Some of the names I mentioned earlier, Phantom, Say, Aptos, Avalanche, like some of these things are going to do 5 to 10x moves, potentially, obviously, depending on how the market cycle goes. And that's really big compared to Bitcoin, right? And so you can get that extra upside potential without taking very much more risk, because those coins they're not going anywhere. They're unlikely to get hacked or break down or any of this kind of stuff. They're pretty big players in the market already, but have that potential to give you a little more gains than Bitcoin, right? So if your guy bringing in 100K, 50K Bitcoin, 50K in these other coins as an example, right? So you still have a much safer part of your portfolio in the safer asset that you want to have some of anyway. And the other coins, that can be where you make a bit more of your money with taking a little more risk.
Can you give us an example of what is an AI coin and what makes it different from other types of coins?
Well, yeah, great question. So look, there's a lot of ways that AI and crypto are coming together, and AI and crypto are such a fantastic combination together because we've already seen the abuses of big centralized tech companies when they are the ones in charge of the algorithms. So we saw the famous example, I think it was Google's Bard. If you said, hey, give me a picture of the founding fathers, and it'd be like a black woman or something like that in place of supposed to be George Washington, right? Just silly woke stuff that doesn't make any sense. Crypto and open source networks with verifiable authenticity can help keep algorithms decentralized and honest. So that's one major important thing. But we're seeing a lot of different ways to approach crypto and AI together. So we have blockchains specifically focused on artificial intelligence. We have like the Near blockchain, which, by the way, I own, of course, the things in my portfolio we were talking about a few minutes ago. But the Near blockchain, it's a great example of these were guys that are literally AI developers, and they built the Near blockchain to be an AI-focused blockchain, literally looking to do on-chain computations and stuff like this for AI algorithms. So that's a way that we can help bring democratization to artificial intelligence and move the power away from the big tech companies, which we all know we can't trust, right? So that's one example. We also have applications, things like the Render network. Now, Render is not specifically AI, but mostly AI. So it's a decentralized GPU network. So if you're a gamer, right, you only play games 10 hours a week, but you need to have a really good GPU to do that. Well, those other 134 hours in the week or whatever there is, you can be actually earning money by renting out your GPU card to companies who need to do AI computations. So the Render network helps connect your GPU to people who want to do AI work, and you can get paid for that. So that's another great example of how a decentralized application can come in and connect people who want to do business together. Then we have what's the newest and most fascinating corner of AI so far, AI agents. So we've seen AI agents come on chain. So these are AI personalities that have autonomy. They've been built by developers, released into the wild. They're given an X account. They're given a wallet. Some money's put in that wallet, and they're allowed to do whatever they want. And what's been fascinating is watching these things operate in the wild, the things they choose to talk about, the things they choose to do. And here's what's really crazy. You might have heard of Fartcoin already. It's so dumb. It's so dumb, it hurts my brain. Fartcoin was actually created autonomously by two artificial intelligence on-chain actors. So these are crypto agents that have their own blockchain wallets. They coded their own meme coin token. They coded an AI agent, connected a wallet to it, built it, deployed the token, and that coin is now worth $1 billion. Crazy. And of course, they named it Fartcoin, by the way, because they thought the humans would find that funny.
Yeah, and humans would find it funny. I mean, I chuckled when you said Fartcoin, and it's so hard to take it seriously with that name. But
people have bet it up to over $1 billion already. Apparently, a lot of people found it funny.
Oh. Another very good video you have on your YouTube channel, it's called 13 Truths That Most Crypto Investors Will Understand Too Late. Take us through the top 5.
Sure. So there's a lot of great things in that. So where to start? I would say that don't get married to any of this stuff. This stuff's all highly speculative. You have to take your profits on these things. I mean, come on. Is Fartcoin going to be worth billions of dollars in the middle of a risk-off bear market when tech stocks, everything's crashing? Of course not. You have to take your profits or the market's going to take them for you. It's like a maxim. Write it down, put it somewhere, never forget it, because especially true in crypto now, index funds and stuff like that, sure, you can hold those for years, whatever, it's fine. It's a different beast, it's a different asset class. This is a player versus player market, 100%. And a lot of new people, one of the reasons why I say to new people generally, unless you're the guy with $1,000, but for new people coming in, stick to the top coins, because here's the deal. When you come into the crypto market as a newbie, this is way crazier than the stock market. This is way more of a Wild West. There are cabals. There are people who are just much more technically savvy than you. They know how to manipulate markets. They know how to, use sniper bots to corner early supply and all this kind of stuff. Player versus player market. Never forget it. It's not kumbaya. Okay. Not everyone's going to make it together. It's not how it works. Okay. A lot of the coins are bullshit. Most of these coins have very little functionality. A lot of these coins are either meme coins, which trade solely on speculation and hype, and a picture of a dog or a frog or a dead squirrel or whatever it might be. There's a dead squirrel. There's a dead squirrel coin, Peanut the squirrel. Anyway, there's that. A lot of these things don't have great utility. And there's something called governance tokens, right? So there's governance tokens, which allow you to govern some layer 2 network or something like this. You don't want to spend a bunch of your money to govern the blockchain. Nobody cares. People don't even show up to vote in actual elections that mean something to their lives. They're going to go govern the blockchain. Come on. So you actually have to define the utility of the coins that you're buying. Don't just blindly buy stuff, which of course comes to the next point, which is you got to do your own research. So many people, I guess it's in all financial markets, but particularly in crypto, because they don't understand things, they don't take the time to educate themselves. They want to outsource their thinking to somebody else. Oh, okay, this guy on Twitter or YouTube, whatever, said, go buy this coin, and someone's not going to think about it at all and just go buy it. And then they're surprised when they lose money or they panic sell it at the first 10% dip because they didn't understand what they bought in the first place. I'm pretty comfy sitting in my bags even on a day like today when the prices are down a lot because I know what I bought. And I'm happy to sit through that kind of volatility. It's fine. I think it was that 5 or was that 4? I don't know. Anyway, that's the main ideas.
Sounds good. For individuals who are just getting into crypto for the first time and are a little bit worried about, some of the scams or maybe losing their money or a website getting hacked, what are some of the safer places to buy and store crypto?
Absolutely. So, one thing, you can now buy ETF products for Bitcoin and Ethereum. So if you're just a casual investor and you don't really want to go, like you're not going to buy Fartcoin or any of these other blockchains I talked about. You don't have time for any of that stuff. You just kind of know Bitcoin and Ethereum, they're the safe ones. They're not going anywhere, and just passively buy a little bit of that. You have ETF products for that now. Once the new administration gets in, we're getting a new SEC head who is very pro-crypto, by the way. We're going to get other ETF products coming in. We're going to get one for XRP. We're going to get one for Solana, one for Litecoin. So you can have and we are seeing now, we just had actually the launch of a product approved by the SEC today and should launch any day in the market of a dual Bitcoin Ethereum ETF. So you just buy one ETF and get both coins. You don't have to buy the 2 ETFs anymore. And as soon as we get more altcoin products come in, you'll be able to buy one crypto ETF that's going to have 10 ETFs in it. And you'll get great exposure to the entire crypto space with one click and not even having to think about it. And it's going to be safe. Somebody else is going to custody the coins for you. You don't have to worry about private keys or getting hacked or any of that BS. Just buy, set it, forget it. Now you're exposed to crypto on a broad scale across probably 10 different altcoins and Bitcoin, which is going to be nice. We don't have that product yet, but I think by the end of 2025, we will have that product. So keep an eye out for that. If you want to buy your own coins, if you want to do it the old-fashioned way, okay, and start finding more things, Crypto.com, Coinbase, for people in the United States, the UK, Canada are great places to go and buy Bitcoin, okay? If you're internationally based, Binance or Bybit are really great options. But here's the thing. Even though all those exchanges I just listed are they're the industry leaders, they're the safest exchanges, and I would be extremely shocked if any of them got hacked or committed some kind of massive fraud in the way that FTX did back in the day. But exchanges are marketplaces. They're not banks. And so if you're buying real coins, you have to take the responsibility of buying real coins, which means that you have to self-custody your own coins. You're going to need to get something like this. That's a hardware wallet And this allows you to store your own coins in this little device right here. Well, this device is actually just the key. They're stored on the blockchain, but still, you need something like that. So it comes with responsibility. Okay. And if you're a major tech phobe or something like that, you might be better off just going the ETF route through your Charles Schwab or TD Ameritrade or whatever account. But if you want to go a bit farther down the risk curve and start experimenting and actually get on the blockchain, find new coins early, stuff like that, you really need to invest in a hardware wallet to do that. And keep in mind that, again, you don't keep your crypto on exchanges. You go there, you buy, you sell, you get out, put it on your own wallet that you control the keys for. We have a saying in crypto, not your keys, not your coins.
Well said. Well said. Yeah. And that's something I got to look into as well. So far I've been just buying stuff on Coinbase, but I think maybe the next step is I got to get myself one of those keys. Is there any company or service that you recommend in that space?
Yeah. I use the Ledger wallets. I've been using them since 2017. They're industry leaders by a whole bunch of different metrics. So they actually have a whole team. I was talking to my contact at the company. She was in Dubai a few weeks ago. And I was talking to her, she said, yeah, we have like a whole floor in Paris of just hackers, and their entire job is to spend all day, every day trying to hack into our wallets. I'm like, that's cool. I like that. She said, even the other companies bring their wallets to us to try to have our guys hack them. Like, I like that. It's pretty cool. So it's, it's neat.
Yeah, that's really cool. Yeah, I've heard Google does the same thing. Google offers its own engineers like rewards if they can hack into something. Like that's how they discover security vulnerabilities. Yeah, that's actually really cool. We talked a lot about Bitcoin and about how the future looks really interesting, maybe even really bright. You talked about the U.S. establishing potentially a Bitcoin reserve. I've heard stuff on the news about UAE doing their own Bitcoin reserve. There's, I think, 2 countries now, El Salvador and Singapore, that are now embracing Bitcoin in a big way. Is there anything on the other side of that? Is there anything that scares you?
Anything that scares me about Bitcoin? Not in particular. It's interesting because Bitcoin specifically, there's nothing that really worries me. Now, we actually had a bit of a market scare the other day because Google brought out the Willow computer, which is 105 qubits, the most powerful computer man has ever made, and a crowning achievement of human engineering and endeavor. And people said, oh my gosh, this thing's going to hack Bitcoin. In order to hack Bitcoin, that one Bitcoin address, just one, you would need at least 1 million qubits. So we're pretty far away from that kind of conversation of hacking the blockchain or hacking any particular address. And the way it basically works is that you'd have to sort of try to get in the middle of the transaction. You have about 10 minutes before the block is completed to try and get in there and scoop the money out. So you would need literally, 10,000 of these, a lot of these computers, right? And we only have one of them so far, right? And it's taken a decade of engineering to complete. And again, massive achievement for Google. But here's the crazy thing too. If we ever get to the point, when we get to the point, because that's inevitably going to happen, we have a 105 qubit computer now, and in 10 years, we're probably going to have a 10,000 qubit computer. Guess what? All it takes is a soft fork to upgrade the network code, and suddenly you have quantum resistance. So Bitcoin specifically, other blockchains have different levels of centralization and all this sort of stuff. The Bitcoin network, not a lot of people know this, the Bitcoin network is the most powerful computer network in the world. By a long shot. It's, I'm not sure what the current amount of echo hashes that it does per second, but it's a gargantuan sum. They're literally probably hundreds of thousands of incredibly powerful. These things are like just giant boxes of chips and circuits that weigh 15, 20 pounds each of just computing power, raw computing power. And they have warehouses of these things all over the world securing the Bitcoin network every second. So it's a beautiful thing. Bitcoin, I have no real worries about. It'll have its ups and downs and stuff over time. And any sort of theoretical conversations about like the long-term economic model and will there be enough mining and transaction rewards when the block rewards won out, I'm not going to be around to see that. The Bitcoin block, so there every 10 minutes a block's created in Bitcoin, and that block comes with rewards for the miners, right? To keep them securing the network. In 2140, there's no more rewards for the mining the Bitcoin blocks, you'll have to rely on transaction fees alone. Will there be enough transaction fees in 2140 to keep the Bitcoin blockchain going? I don't know. I'll be dead by 100 years or whatever, or 50, 60, 70 years. Won't be my problem to think about. But those are theoretical conversations for the future that I'm sure computer scientists will work out later on.
As we move to wrap it up, tell me, what does the typical day or typical week of a full-time crypto investor look like? I mean, your life sounds very romantic, very, very exciting. Tell us about it.
It's a lot of time sitting in front of your screen. A lot of what I do, of course, is creating content. Me and the team, we put together all kinds of stuff. We have a newsletter we're smashing out multiple times per week. We are posting, I think it's 30 times a day on X right now. And it's not just posting BS. We're sharing news, we're sharing research, all this kind of stuff. So we're posting a lot of stuff over there. We're doing right now 2 YouTube videos a day. A huge amount of content goes into it. So there's that angle of it, which is trying to educate people and create content and do all these sort of things. And then there's the sort of investment side. The investment side doesn't actually take very much time. It's mostly just writing investments, flipping the occasional trade and stuff like that. So every once in a while, gambling on some new meme coin. But for the most part, the majority of what's going on with the investment portfolio is relatively passive. But I spend a lot of time keeping up to date with the news and what's going on across the cryptocurrency space. So I suppose I have the ability to let all that be very passive, because the main focus of my job is continue to educate myself every single day about what's going on in the cryptocurrency space and staying up to date with all the latest advancements and tech updates and all this kind of stuff.
Where can people reach out to you, and what are the various different social media apps that you're on?
Yeah, so our biggest accounts are on YouTube. So find the YouTube Lark Davis channel, almost 600K subs. So make sure you guys find the real one. There's copycat impersonator channels, so make sure you find the real one. And over on X, make sure again to find the verified account. Find us on X, Lark Davis verified account, and you'll just find all the links for the newsletter and stuff over there. We're sharing loads of updates, trying to educate people what's going on in the markets every single day of the week. So come join the journey, and we'd be happy to see you there.
Awesome. Thanks very much. I will put the verified account links into the show notes to make sure people follow the right channels. But yeah, thanks very much for your time today. It was a fascinating discussion, and wish you all the best in the future.
Thank you.
Hey, thanks for joining us for another episode of the Money Seed Podcast. Please remember to click like and subscribe. It really helps spread the message to other investors, and it helps attract new viewers to the show. We appreciate your support. Thanks very much.